Peter Reznicek is the chief strategist at shadowtrader.net. Pete, great to have you back with us. Let's talk about some of the charts you're looking at right now, because when you take a look at the broad market moves, we've obviously got a lot of strength in equities. What jumps out to you about the S&P 500 right now?
So basically right now what I'm looking at is something I call a channel top. And this is a technical pattern that not a lot of people pay attention to, because I think when most people draw trend lines, they're looking at supports that are sort of underpriced. But if you see in the chart that I'm sharing here, I'm actually looking at a longer term weekly, which is connecting tops. And that's what I call a channel top. And we're right there just now. The all-time high just now in the S&P very recently was about 30.19 and change. And I'm seeing that channel top right around 30.30. So we obviously need to see a little bit more confirmation, some sort of, stronger momentum over the downside to confirm. But I just think it's noteworthy to point out to investors where we are, that we really are very, very close to this sort of channel resistance in the SPX.
Let's continue our chart chat. Peter Reznicek is on the phone with us. We're going to bring up some charts here as we continue the conversation. Peter, thanks for sticking with us. So we talk S&Ps. Your point is we're getting right into the corner of the channel top. One of the other things we discuss here a lot is the Russell. What do you think about the small cap situation?
So definitely showing a little bit of relative weakness, and it's been relative weak for a while. And I think longer-term investors especially need to pay attention to it, because when you look at this chart here of the Russell, this is a weekly that you're showing, it's clearly nowhere near the S&P, right? It's not the same pattern as what you're seeing in the Dow and the S&P, or even in the NASDAQ for that matter, and that definitely matters. We have seen stronger declines historically start from weakness in the small caps. Obviously, it's kind of a risk-on, risk-off scenario with them, so I think it's something to pay attention to here.
So you've used this as kind of a maybe like a higher beta type of interpretation, a more gauge of risk than the big caps?
Yeah, exactly. No doubt. No doubt. I mean, like I said, we've seen it before. I tend to look at this, even on a shorter-term basis, I feel that it is somewhat of a predictor. You definitely see some leading action in the Russell very often, like when you see, everything else is rallying and it's kind of lagging. Lo and behold, usually you get turnarounds in the S&P or in the Dow. So we've definitely something to pay attention to.
We've had some guests, and I know this is more of a fundamental type of interpretation, Peter, but they say, well, the small caps, sometimes a late cycle, those slow down, and the S&P's got legs beyond that. What will you be looking for to see if that's the case? I mean, how long does the S&P stay diverted and sort of diverged, rather, from the Russell? How long can that happen, basically, before it becomes alarming, or is it now?
I'd say I would put that at about 50-50, to be honest with you. Like with anything in the market, as people say, things can just stay irrational longer than you can stay solvent. So you have to be careful. But I look at everything as pieces of data in an ongoing narrative. So when we look at something like the Russell, it's just one data point. So you have to just keep it to that. It's not the be-all, end-all. You have one data point, and you need multiple data points to come together in order to make, a big turn in the market. So that's something to keep in mind as well.
Yeah, all right. Peter, let's talk some gold. Pretty wild action this morning where it was up, and then we had a durable goods number that was pretty solid, and it turned around, or maybe it was confusion over whether ECB was really dovish. I don't know. What does the chart tell you?
The chart to me is saying bullish. I've been bullish on gold for a little bit here. If you look at this monthly, we're going out about 20 years here, and this to me is a strong technical break. And what generally happens with gold is I call it the Heartbreaker Trait, in that it'll constantly do this to you where it's very noisy and it doesn't really have a lot of clean moves, because there's so many things globally that are pushing and pulling on its price. But the technicals really can't lie here. And if you look at the pattern over the number of, say, last 6 years or so, it's really been in a very tight range. And that in and of itself is a bullish sign, in that it hasn't gone up, but it hasn't fallen either. And as long as that range keeps winding up, the break should be bigger. Now, recently, we finally crossed very key levels, which is 1350 in the GCs and also 1400. We're holding there. Those levels, if you see on the chart, were resistance many, many times, 6-7 times on the monthly. That is of note, and we finally broken that. We do have a rate cut coming at the end of July. We may have more rate cuts down the pike, as you know. That's favorable for gold, so I think bullish here.
Now, it's hard to talk gold without talking, rate cuts, as you mentioned. Even with the technical chart as compelling as it looks with the big breakouts, I'm with you on that, Peter, right? I mean, gold just powered right through 1350, then 1400. But do you need to see, it seems like there's a speculative bet in gold that central banks are going to have to add even more to the punch bowl than they have already. Does this thing have the potential to do a U-turn if that doesn't happen?
Yes, it always does, but I'm of the opinion that once you start finally breaking these levels, that potential for that U-turn sort of gets less. Momentum tends to feed on itself, and now you're in a situation technically where you're way above that resistance, and there'll be short covering, et cetera. So the odds would favor the opposite.
All right, let's talk some stocks before we let you go, because we're going to hit Amazon and Alphabet this afternoon. But one of the FANG names, of course, that's still been struggling post-earnings is Netflix. How ugly does the chart look, Peter?
So the chart looks very ugly, but it's really interesting because I wanted to talk about Netflix as a possible bullish setup. And the reason I say that is because you see the green line that I've drawn there on the chart at the 330. Basically, the stock is doing everything that it shouldn't be doing. The news was bad. Subscriber growth was curtailed, right? You had this huge gap down, big volume, typical earnings move. But notice what's happened since then. It's slowly grinding back up. So if you see that 330 area retested, the potential is there for a gap fill, and the odds favor that you move back up to, say, 355, 360 and fill that gap. Because once again, whenever a market or a stock does something that is opposite what everybody thinks it should be doing, generally there's a big move in the other direction. So I think it's something to watch around that 330 level.
So now this is interesting because we had the big gap down, but I kind of made the analogy when we covered it to what happened with Tesla. When it broke its range, it got pretty bloody. And to your point, it hasn't fallen apart quite as quickly as the Tesla chart did.
No, definitely not. Definitely not. And I think fundamentally, you'd have to say Netflix has a lot more. I wouldn't say more going for it than Tesla, but it's a different situation. Tesla just has could be a lot of negative factors, with their balance sheet and their debt, et cetera, and whether they can ramp production or not or whatever. This is a much simpler equation, I think, with Netflix.
All right, I like it, Peter. One more. We're going to talk Alphabet on the fundamental side. Earnings this afternoon, as we just discussed. The chart for this, from my armchair perspective, TA, I don't know what to make of it. How about you?
Yeah, exactly. I'm glad you said that, because what I make of it is just basically that it's relatively weak, and this is the reason why I wanted to choose this as my fifth chart to talk about, because they are going to be reporting. But what's most important here is, I think, is why is the stock so weak against the backdrop of an S&P and NASDAQ 100 that are at record highs? You can see that it's so many multiple lower highs after the April earnings gap down. It just never really recovered. So I think this is one to watch after their numbers, that if they do come in weak and there's yet another gap down, it may just signal further weakness that stays with us for a while. They continue to be a short.
Yeah, really interesting stuff. A really good perspective, I think, too, given the importance of those big mega caps. Peter, really good stuff. Glad to have you. Thanks for jumping on the phone with us, Peter.
No doubt. Thank you, Oliver.
You got it. Mr. Reznicek is the chief strategist at shadowtrader.net.